Two very different, very interesting deals anchored the week. The first and the most interesting was Ramsay Health buying into a big French private hospital operator. This is a company-making deal of huge significance for Ramsay. I say it equals CSL's groundbreaking move to buy into the European blood bank industry by buying the Swiss blood bank, ZLB, back in 2000. That was the deal that made CSL, turned it from the old Commonwealth Serum Laboratories into what is now a global player in the blood and healthcare industry, and a huge beneficiary, obviously, to shareholders. The Ramsay deal, Ramsay is the biggest private sector hospital operator in Australia, private hospital operator in Australia. It now becomes the biggest French private hospital operator as well. Indeed, Ramsay at the end of this deal will have around 6% of all the hospitals and clinics in France, private and public. It increases the size of the company by about a third, and its business will now be split almost equally between Australia and France. What makes the French market so appealing are two things. Like all Western countries, France's population is ageing. The growth rate in its basic population is less than 1% a year, but the growth rate in those aged over 65, who are the major target market, obviously, for healthcare, France's population over 65 is growing by more than 2% a year. Not as fast as Australia's ageing population, but still a very lucrative market. The second interesting deal was Aquila. This was not so much a deal as a raid. Infrastructure group Minerals Resources plunged into the Aquila market and bought 12%. What makes this interesting is that Aquila is under a takeover bid from Baosteel, the Chinese steel company, and Baosteel already has 20% of the company. The board don't like the takeover. They say it's too cheap, and Minerals Resources bought well over the takeover price. Fundamentally, the board will control how this turns out because the founder of the company, Tony Poley, and his partner own 40% of the shares. The register is now fundamentally destabilised. 40% in the hands of those two director shareholders, or two shareholders. His partner's no longer a director. 20% in the hands of Baosteel and 12% in the hands of Minerals Resources. This will result in some sort of a deal. But what makes this deal particularly interesting is that it comes 2 years after the time frame where you might have expected it to happen, because Aquila has some nice deposits, but they are undeveloped, and we're supposedly moving into the maturing of the resources boom, where there's an awful lot of production out there, and the demand is going to be flat and prices are likely to fall. Aquila has two very interesting deposits, but they are only deposits and will cost $5 billion or more to develop. Who's going to pay for that? When will the demand actually sustain that? And yet we see a battle which set the share price up sharply. Finally, we also saw some profit warnings in the retail space this week. I think in both cases they were company specific, the Reject Shop and Pacific Brands. They've got into difficulties in terms of aligning their production cycles or their import cycles and their stock cycles with what's happened into the retail space, and they're going to take a bit of a hit. But it does sort of point more generally to the soggy state of retail spending, particularly in the discretionary space, in the fashion space, in the goods space, and particularly clothing. So interesting indication on the state of the economy, which is not looking fantastic. We have very strong growth figures for the March quarter, but that's unlikely to be repeated in the June quarter. So that leaves the whole policy framework very, very uncertain. And what's making it even more complicated is the fact that the AA dollar continues to go up. And it's been given a huge boost in the last week by the moves by the French to move to negative interest rates to actually force banks to lend out to companies rather than leave the money with the central bank. What's that doing is also driving money out of Europe looking for high returns, and the Aussie dollar with our high interest rates looks like a fantastic haven. And that's pushing up the A dollar, which is exactly what we don't want to see when the economy is still struggling to gather pace.